Our next topic, brought to you by Bybit, is how do trading firms in Asia make money? Demystifying the crypto alpha and its importance in Asia. The interest in digital assets in Asia has led to a rise in trading firms, many of whom seem to be doing exceptionally well. What's the secret sauce and how do they do it? What is the role they play in this decentralized economy? As always, if you have questions for our panel, please go to www.slido.com, enter the code BlockShow2019, select stage 1, scan the QR code on the screen, and simply write down your question. Now, please welcome your moderator, Sang Lee, and panelists Kyle Davies, Joshua Ho, and Clement Ip.
Good afternoon, everyone. My name is Sang Lee, and I'm the CEO and co-founder of DarcMatter, as well as Constellation. We're a fintech platform working on digitizing alternative asset management through blockchain technology. And before we get started, I'd like our esteemed panelists to introduce themselves, please.
Hi, I'm Kyle Davies. I'm at Three Arrows Capital, and we're a hedge fund here in Singapore. We do a lot of derivatives trading ourselves, but we also have an OTC desk.
Hi, my name is Josh. I'm one of the co-founders of QCP Capital. We're an OTC desk based in Singapore serving the Southeast Asian market. We trade derivatives, market-making options, and we also invest in projects from time to time.
Hi everyone, my name is Clement, co-founder of Genesis Block in Hong Kong. We have a Bitcoin center that we do a lot of events in Hong Kong. We have one of the largest community in Hong Kong. But on the side, we have an OTC desk and a prop desk.
Okay, great. So before we get started, I'm going to re-summarize what we're going to be talking about. So it's how do trading firms in Asia make money today? And then we're going to try to decipher what crypto alpha really means and what are the changes in the market right now that are relevant to the firms that our panelists represent, but also kind of speaks to what are the changes in the market right now that might drive more adoption, more trading, and more opportunities to actually generate alpha. And before we get into these questions, I'd like everyone to kind of perk up their ears. Please send us the questions. I do have my iPad here. So once the panel is done, we can go straight into Q&A. So there's a lot going on in the market today, right? So we have political changes that are going on. We have a massive trade war that's going on. And all of those are kind of a backdrop to a lot of the macroeconomic changes that may or may not help adoption in cryptocurrency. And right now, today, Bitcoin is probably the most traded asset, a digital asset in the world. But we are seeing some evolution in the new types of assets that are coming out in new composites, new strategies, new structures. So could somebody please speak about some of the new products that you're seeing or new opportunities that you're seeing in the market where consumers might be able to generate more profits or trading firms might be able to generate more alpha?
Well, I'll start. I think one of the things that we've seen pretty large growth in the past 18 months, let's say, is borrow and lending markets. So and staking. I would say maybe the 2-3 years ago, the theme was, to take your crypto and put it into cold storage and forget about it and hold it and do it. But now there's a lot of things you can do. You can stake, you can lend, and it has a utility to it. So that creates a lot of alpha around derivatives trades that you can do, or just yield that you can earn. So we've been pretty active in that space.
Yeah, likewise, a good 4 or 5 months ago, we saw the options market expand pretty significantly. A lot more volume available, a lot more that we could do there in terms of offering yield to our clients and our managed accounts. And Sang, you mentioned Bitcoin. I beg to differ out here at stablecoin land here in Asia, right? You look at an American or European desk, they'd be 70, 80% Bitcoin Ether dominated. You know, we're the opposite out here, and I think Clement will agree with me, and Kyle too. It's like 90% stablecoin flow out here. And what's interesting about that is the real use case coming from it is really trade finance, right? In all these markets with poor capital controls, you have very difficult access to foreign import and export markets, and these guys now are using onshore local currencies to buy stablecoins. They pay suppliers in China in stablecoin, typically in Tether, import things by the container load, sell them on C2C marketplaces, and it goes round and round. And to me, that's a tremendous money mobility use case. So plenty of spread and plenty of earnings to be made, and finding OTC opportunities in new local markets too.
Okay.
Yeah, Josh mentioned, I mean, for us, our desk, more than 90% is Tether. I think a lot of people don't realize that in China, it's perfectly legal for people to purchase cryptocurrency. There isn't any fiat to crypto exchange out there, but peer-to-peer is perfectly legal. We are seeing the traditional money exchangers, they are coming into the space using Tether as a payment gateway to help people move money in and out of China. My understanding is same in Russia, where a lot of Chinese merchants that have businesses in Russia are using Tether to move money back into China. But apart from trading cryptocurrency, I think the whole general adoption is happening. We're seeing games being built where the user interface doesn't have crypto. They're actually collecting these points or gems, whatever you call it, and they have a plan that it's going to be transferred into some type of cryptocurrency. More merchants are accepting crypto in Hong Kong, so I think that really does help with adoption.
So I think just to kind of expand on that question a bit, I think what we're seeing in Asia is obviously a big stablecoin usage for trade or to kind of overcome border controls, if you will. But in and of itself, even in traditional markets, kind of FX or currency trading, that's a very difficult market, I think, for a retail investor or a single trader to generate alpha from, right? Particularly when there's going to be more stability in the market. Do you foresee that any other changes will occur where kind of trading or trading activities can still kind of pick up and generate more alpha for investors?
I mean, okay, so the one question is the trading, right?
Yeah.
And on the trading side, I mean, it depends on your time scale and what the catalyst is. But from our perspective, stablecoin does not mean you can't make money. I mean, in fact, there's many platforms where there's an arbitrage actually in how much you can make on a certain yield, or trading one stablecoin for another stablecoin. And there's actually a lot of innovation and stuff coming out there. So for us, I don't see stablecoin as being no alpha. I see it actually as being a lot of alpha and a lot of new things coming on.
Because stablecoins, when you look at the pricing, it bakes in the real world cost of capital mobility, right?
Yeah.
That's why it's typically at a premium in certain markets. And
it's a larger use case too, frankly. So
exactly.
it brings in people that can do other things.
Like the trade finance thing I mentioned earlier.
Yeah.
So we find it entertaining when our Western counterparts reach out to us for information about what's happening out in Asia. They're like, oh, we're really worried about what's happening to Tether and what the New York Attorney General's doing. We're like, yeah, it's really bad. Sell me all your Tether. I'll take it. We're always onboarding and bringing people on like that. I think it's taken on a life of its own out here, right? Okay. Same thing, you got to, Hong Kong
especially don't really care about the underlying of Tether. I think us being, we understand what's going on. There are lawsuits with Tether and all that. We get a little bit worried about what could happen if they don't actually have the money to pay out. But the people that we see are trading a lot of Tether, they don't care. They don't look too deep. All they care is how many brokers out there would accept Tether. I think in Korea, it's like they love USDC instead, right?
Yeah, yeah. If you, actually,
interesting.
Korea's heavy TUSD market, which is kind of
TUSD,
interesting
sorry,
on the OTC side. And it's funny when you go to the money changers in some of these places. In Hong Kong, for example, you can see tether prices quoted physically on the board. So British pound, Aussie dollar, USDT. And you won't see that level of adoption elsewhere.
Okay.
So we're laboring the point, obviously, about stablecoins. There's definitely money to be made there.
Yep.
But more importantly, the guy who's using it, the one I mentioned earlier, he's bringing these goods in to sell in his growth market, his home market, where he might be making a 20-25% net margin selling those products, which he couldn't make before because he was capped at a $25,000 limit monthly previously to get money out the country.
Right.
He couldn't even pay his suppliers.
Right.
So he's making money one way or another.
Right. So Josh, you raise a good point, right? Because traditional financial markets or kind of financial infrastructure in general is heavily driven by consumption habits. Like how do people actually procure goods, assets, currency in order to conduct everyday things? And we've seen the cryptocurrency industry kind of evolve in a reverse way from financial services, right? Exchanges became very big, then firms started showing up versus the other way of seeking liquidity after the firms started doing a lot of business that we've seen in history. Do you foresee like a change coming into the market where there's competition between the exchanges and asset management firms? Do you see more flow going away from exchanges into asset management type firms like yourselves? What do you kind of see the market playing out as?
I can start.
I think, sorry.
Yeah.
Sorry. I think with OTC is really a relationship thing. As I mentioned, what we're really seeing is that these money exchanges are using Tether as a payment gateway because within, give you an example, China, like everything's monitored on WeChat, right? They can't really quote renminbi US dollar there. Well, they can, but they're going to get caught. That's why if you don't have the right channels, like people are paying up to 7% just to move the money out. When it comes to OTC, I mean, they do, same with you, right, Josh? Like they decide to trade with you because they trust you and they believe that you're not going to,
it's entirely reputation driven.
Yeah, exactly. So I think there will always be a space for OTC, but eventually if they become more price sensitive, they're going to shop around and maybe things will get even tighter.
I think it's kind of interesting because the clientele has definitely shifted. For us, we run a number of managed account strategies for family offices, and many of them with a view to speculate on crypto without having to buy the underlying. Many times they just trade options with us, covered calls, that sort of thing. And these guys have never seen a strategy that yields 50 to 100% a year. They get addicted to it really fast, and then they start doing more and more and more, and then we start to think about where capacity is for these sorts of things. So I think there's obviously a window here, the next couple of years, in which the theoretical and the implieds are really, really far apart, and that's obviously the opportunity for a product that you're building as well, I believe. And that's where I think a lot of us are looking to for returns now.
I actually would say that we're seeing a lot of the liquidity move away from exchanges.
Okay.
So whereas derivatives may have taken off, 2019 might be the year of derivatives, right? Many exchanges, lots of volumes moving in certain ways, a couple different products. But for spot, might be the year where it moved off of exchanges. So I think, and it's gotten much more sophisticated too. Maybe a year ago we would have traded mainly with on chat. That would have been if you have any meaningful size, it would have been a chat trade. Now OTC counterparties are expected to have an API or a GUI. And you can see just the tightest spreads, 24/7 liquidity streaming, better than an exchange. So I think the barriers are just getting more towards the way the FX market would evolve. This is the same as what you would see in FX, and I expect that to continue.
I like how Kyle actually answered the question. No, but that's completely true because, I mean, just thinking about it, right? You've got players like Jump, these big Chicago houses coming to the space, and they've probably spent hundreds of millions of dollars on R&D building their tech for a multi-trillion-dollar market. It's overbuilt. And then you focus that gun on a market that's 200, 300 yards on any given day. It's just scraping the bottom of the barrel for spreads in crypto.
I really, just to add one more thing, I would say that maybe in 2019 you would have seen an aggregation of things happening on exchanges, but that doesn't necessarily mean that that's the best person to perform that thing. I mean, someone might be really good at marketing, another might be really good at bringing in retail or but in terms of liquidity provision or market making, they may not in fact be. Exchanges shouldn't be market making their own liquidity, right?
Yep.
So I do think there is a separation to be had, and spot would be a classic example where liquidity has moved by and large off of exchange for the larger pairs.
Agreed.
Okay. And we kind of talked about, you kind of touched on derivatives versus spot. So let's kind of jump into the derivatives market. That's both on exchanges as well as OTC. We're also seeing at the same time an evolution of types of contracts that we've never seen before in traditional financial services, where people are trading futures on things that are futures on futures, for example, that we're betting on the future of the industry, for example, right? So what do you guys foresee as the most imminent opportunities kind of in the derivatives market right now? What will help catalyze the next stage of growth for the marketplace? And what are some of the things that you've been seeing that may actually be a detriment to the industry potentially? Kyle, do you want to start?
Sure. So I think, there has been a lot of innovation, but there also has been a lot of copying what other people are doing, right? So, so there is a lot of reflected liquidity. There's a new exchange that's got tons of liquidity on it. Chances are that's all coming from another source, right? So I think, I do think there. I just talked about this actually at a different place, but they basically. There is a systemic risk to having reflected liquidity from a single source to many different sources. For example, if that single source were to go down or have an issue or have a maintenance, unscheduled maintenance or something like that, you can really have some serious liquidity gaps in the market, and that can cause flashpoints, things like that. So I think that's a serious problem. I think the standards are just going higher. The API quality, the matching engine quality gets much better. But I think that's like the area that the innovation that I'm more excited about right now, not necessarily the product itself. It's easy to throw products at a screen and hope something sticks. Yeah.
Yeah, I mean, there's been a ton of product innovation out there. There's almost too much available now. But it's easy to forget that, this wall of institutional money we were promised that would come in could so easily deploy without the right regs in place. So again, it's an easy fallback to say that regulations still aren't in a place where that money can flow in. But I think we're getting closer and closer. And I think that's making a huge difference in terms of new money inflow. As for example, what Clement does as well, we're looking into new markets here in Asia. As we open up, for example, in Indonesia, we're seeing a ton of flow coming in from yield-hungry local asset management firms that are seeing Bitcoin as a new asymmetric investment. And that's going back to the original, sort of 2016, 2017 story of money coming in. Even before we get to more exotic products, it's just the first fiat leg in. And what's interesting there is that they're just about to release the first crypto exchange license to an exchange that we have in Indonesia. And I think that's an exciting development just unto itself, being able to onboard those guys and offer liquidity to them legally.
Clement?
Yeah, I think we are definitely seeing a lot of these futures products out there. Worth mentioning, I mean, some of these exchanges are doing, are naming their own sort of token. As you know, cryptocurrencies, there's Bitcoin, there's altcoins, and there's a bunch of what they call shitcoins. And you can just buy a token and have a basket of these tokens, and you can trade it. But it all boils down to, for us, I think it's really important to think about counterparty risk. Same with spot. Most people that come into the space, they will most likely leave their coins on the exchange. We've seen many exchange go bust recently. There's a Canadian exchange that go bust as well. I think very similar with futures exchanges. At some point, we probably will see one of these go bust as well. But at least with spot, it's once you've bought the asset, you can actually take it out. and once you own it. So it's really important that, like, we're talking about adoption here. So new people coming in, it might be very easy for them to just get exposure into crypto by just depositing some some stable coin in there and get exposed to, all sorts of cryptocurrency. But then ultimately, it's like when you're trading futures, you might not be able to, withdraw some of these tokens.
Right.
So I think it's really important to always think about counterparty risk when you're trading on exchange.
And Clement, you raise a very interesting issue, I guess, where the industry is facing, or we're facing as a whole, which is where I think the regulatory question kind of comes in, right? Who's the fallback? Who's accountable for these types of risks? I mean, we can tell everybody on exchanges never to hold your tokens on exchanges, but in actuality, for most investors, it's a relatively sophisticated ask to move it to a wallet, right? And which is why a lot of regulators, particularly because our parent company is in the United States, we have the pleasure of working with US regulators, which has positioned us in a unique kind of angle of looking at Asia and saying, are there new opportunities here because the regulatory agencies seem to be more forward-thinking, or are they acting more proactively? So why don't we start with you, Clement, on the Hong Kong regime? Like, what's happening there right now?
It's a bit of a mess right now, Hong Kong, unfortunately.
Yeah.
However, the SFC, regulation-wise, like SFC recently just announced an opt-in sort of, basically telling, like, you can get regulated by us. However, you have to trade at least one security. It's not easy to get the license. So you need at least like license 1 and license 7. If you have nothing set up, it probably will at least take you 6 months to get all the licenses if you don't buy it. I think when it comes to regulators, like the Hong Kong approach, I would say, is wait and see. Still, sort of like they're doing something. They acknowledge they're trying to understand what blockchain is. But we speak to, for example, the police force, because some of these applications that it's like a map application to figure out where the police are, was accepting Bitcoin donations, and the police wanted to figure out where is this going to, and they can barely figure out simple Bitcoin input-output. How it works. And they were asking us, okay, how do we figure out where this address is going to? So I feel it's still going to take a long time,
Okay.
At least for Hong Kong,
Okay.
to have something solid in place. Yeah. But regulation is good.
Yeah.
I think governments ultimately want to control and tax, right? So.
And while we're in Singapore, there may be a lot of the audience that aren't from Singapore. So Josh and Kyle, why don't you kind of chime in on that?
The domain where it matters is banking at the end of the day, right? Does the regulation allow you to have a stable fiat gateway to handle size? I would say a lot of the different parts of Southeast Asia, Singapore included, are very forward-thinking. The Philippines has had virtual currency legislation for 3 years. Indonesia, as I mentioned earlier, classifies it as a commodity. Thailand has released 5 different licenses. Vietnam is getting closer and closer. And here in sunny Singapore, we're looking forward to the Payment Services Act early next year. So forward-thinking, open, but the question is whether the regulator is looking at the banks and saying, you're the last line of defense, or look, there's a friendly, innovative piece here where we'd actually like to open the floodgates.
Right.
That's not really said publicly, right? And in reality, behind the scenes, they've got them by, yeah.
Yeah, I agree with that. But I do think, I don't know, maybe one greater question is, like, to what extent does that inhibit your business even? Because, I mean, banking, I agree, in Singapore is still not that easy if you're a crypto firm. But somehow all of us have no problem with banking. So I just don't think it is inhibiting business per se. And the regulation that counts is happening, right? The first CMS license was given to a Swiss bank in Singapore a week or 2 weeks ago, right? That's a huge deal. I don't think it's going to affect everyone immediately, but
step in the right direction.
It's definitely moving. Yeah.
And one of the, I guess, the original premises of Bitcoin and blockchain was that technology would be able to solve a lot of this counterparty or intrinsic risk in these businesses, right? Trust that's built into technology. Have you guys seen actual evolution of potential things that may disrupt your businesses, that may make the counterparty, the importance of a counterparty secondary to make transactions automatic?
Okay, I'll let someone answer the transaction part. But I mean, there's a lot of questions about DeFi and on the lending side, right? We follow it quite closely. But from our side, we're a trading firm.
Right.
And I think one dirty word in crypto still is credit.
Yep.
And it's not, for some reason, it's understood outside of crypto, but in crypto, it's like really not understood. There's this idea that if you're taking credit risk on someone, an uncollateralized loan in any way, that's naughty, that's bad, which is frankly absurd in the rest of the world, right? It's more a question of, well, what due diligence did you do in order to justify this credit risk? And I think that's the area that maybe some firms are getting better at, some are a little bit slower, and yet trustless is always better. But at the end of the day, you need to run your business. You can do some level of due diligence to understand things, and that's just the way the world works.
Yeah, that's the knee-jerk reaction to the concept of it being an irreversible P2P transaction.
Right.
Yes.
When in reality, if we are constantly pushing the concept of over-collateralization, there's just no credit creation.
Right.
The space never grows. Right. And that's problematic across the board.
Right.
So yeah, we look at we look at the DeFi projects from afar, and we experiment here and there, but they don't present to us any particular exciting opportunities until credit creation becomes the norm.
Okay.
Yeah.
I think there are some that are getting there, but I agree. The main problem now is if you want to do something and the collateral that you provide is more than 100%, you have shrunk the pie. You have not increased the pie.
I mean, the scarier part is the incentive created from over-collateralization by the centralized entities that collect it.
Right.
And then they put that out into the real world onto potentially super high credit risk platforms like invoice financing, lending tree, P2P type stuff. And the end user on this side, on the crypto world, doesn't realize where the money's going. They're just so happy to see that they're getting like 10% back in their dollars.
Right.
Like, where else in the world do you get that? Of course it's going out to somewhere risky. But most people in the crypto world don't think about that.
Right.
I have nothing really to add. But I think with the current situation, my understanding is there's more people that are willing to lend than. Is there a demand for borrowing right now?
I 100% agree
Very
with that.
borrowers right now.
The problem is finding good quality borrowers.
Yeah.
Or people that want to borrow at exceptionally high collateral rates, where you don't need to trust them anymore, right?
In which case, the only meaningful form of, for the other side on the balance sheet is a stablecoin. You try to do this with Bitcoin and Ether, and it becomes much more difficult to manage.
Yeah. I mean, from time to time, we get requests that people wanted to borrow some of these altcoins. I mean, obviously, for the obvious reasons, they just want to short the thing to the max.
We see a lot of. I can speak to the legitimate side. From my perspective, we've seen a lot of miners looking at borrow products. I was just at another conference in Chengdu. Huge borrow demand. Miners that don't want to sell their Bitcoin. They want to pay their expenses in dollars. They already have a large exposure to Bitcoin. What's more? If they can finance that in another way, and they're providing a substantial amount of Bitcoin collateral. That's a very legitimate use case of a borrow and lend. Another is trading futures basis. Anyone that needs to finance a Bitcoin denominated business, there's many ways to do it. But that we would like to see a credit expansion, not a credit consolidation there. Yep.
So I think for those folks that have, I guess, less exposure potentially to traditional financial services, but credit is the foundation of what makes things kind of hum and haw. And it's what allows transactions to occur without money necessarily having to exchange hands or having to take equity risk in the meantime. And what I think the panelists are saying is that kind of foundational element has yet to evolve, right? It's yet to get to a point where we have a global infrastructure that's much larger than the underlying that can help things move along very, very quickly and efficiently, and in the future, cheaply, right? In a very cost-effective way. So I think we're probably coming up close to time, but I do want to kind of talk about what you guys see as the future for your firms specifically? What are the kind of businesses that you guys are targeting? What kind of products or types of investment strategies that you guys are looking at specifically? Why don't we start here, Carl?
Sure. One of the things we're looking at is we've developed a borrow and lending product quite a lot this past year, I think, along with a lot of other, along with the market. But we do believe that the market should tend towards their expertise. So whereas an exchange might try to do everything or be consolidating over the past year, that doesn't necessarily mean that they're actually good at all of that. And I think that, for example, maybe wallets are where things should start, where some client acquisition should be done. Maybe then an exchange should be a separate matching engine. Maybe liquidity provision should be a completely separate thing. Everyone has their own expertise. And yes, it's nice to aggregate it all together, but it doesn't need to be that way. And that's just frankly not the way it is done in other markets. So for us, we're trying to come up with products where we can offer what we're good at, and not offer what we're bad at. And we're not good at everything. So we're coming up with different API solutions for clients that they're expecting now. Okay. The average client would have said, just give us a chat before. Now they say, no, we want a streaming quote, 24 hours a day, streaming liquidity, multiple different products. And I think that's something that's important.
Okay. Totally agree. Constantly get asked, do you do A, B, C, D, E? And like, no, it's really simple. We like to focus. We're good at navigating local markets, so we can open those up to our clients. We're building out a few API solutions for structured products and the OTC options that we already offer. That to us is a growth industry, and we'd like to be leaders there. We'd like to keep the focus on there because it just feels you're scratching the surface of the sheer size of the market available. Even, the marginal benefit of a new innovation to a market that still can't access crypto is pointless. And for us, if we're focusing on Southeast Asia, we're still very much in the dark ages here in terms of the fiat on-ramps. So we're still focused on that part. And that's more of an operational innovation than it is a product one. And it is ops and execution that really wins the day here. The speed and the efficiency of your back office, that's actually a huge amount of my day-to-day is dealing with KYC, AML, it's a real nightmare, that sort of thing. So yeah, I think the focus is getting better at what we're already good at, and then looking for new openings that are potentially scalable with a small team, because it's very hard to build a business in this space with the talent, rather the lack of, and bringing the right people in. So for us, focus is everything.
Okay.
For us, we're more retail focused. So we're going to be continuing doing these, Bitcoin one-on-one talks. We think there's still a lot of people that don't really understand Bitcoin or own Bitcoin. We are big believers of Bitcoin, so we're going to continue to do that. We think, what we saw with HTC and Samsung are having their wallets built in on their phones. I don't know when iPhone is going to do that, but at some point, I think more and more people will be using crypto without really using it. So our focus really is, focus more on adoption, retail, getting them to understand the basics, and then hopefully they'll do the rest. And
actually, I want to give an example that's not often told. And again, I've mentioned the Indonesia market a few times. It's just one we're very focused on. A friend of mine has a startup there that just does tokenized gold. Not on the blockchain. There's no tech element to this. They centralize gold future liquidity. So no gold spot, just gold futures. And they sell physical representations of gold on phone cards, like literal physical cards. $200 million a month in volume. Wow. Absolutely insane. And it makes perfect sense. They get used for payroll, gifting, and money mobility because it's a fundamentally physically decentralized country. There's 17,000 islands. Right? That, to me, is a proxy for success because you have a mobile penetration rate of about 80% in that market and growing. Right? All you have to do is move that digital, and then you don't need those cards anymore.
Oh, interesting. So, Clement, I think as we wrap up the panel, I'll start with you because you were talking about kind of like blockchain 101, Bitcoin 101, the work that you do. For aspiring or current traders, I guess, in the audience, if we could kind of end with a snippet of advice or ways to identify new opportunities in the market from the panelists, could we start with you?
Sure. I think if you're trading on exchanges, I think most important thing is always think about counterparty risk. I think that's what I would say. Don't keep your coins on exchanges. Or at least always have some. Get a hardware wallet. Don't be lazy. I've experienced an exchange go bust and lose my coins. I don't know how many people here are own crypto, but yeah, take it off the exchanges.
I think the bigger problem is not so much the product, but more the interpersonal risk, as in it's very hard to figure out in the minefield of crypto who to believe and who not to. And the general rule of thumb is if it's too good to be true, it probably isn't.
Yeah.
So just be very careful when you have the trading experts come up to you and tell you A, B, C, D, and follow me. You're probably being taken for a ride.
Okay.
So it's more about energy conservation than it is about upside.
Right.
Sure. Yeah, and I would say everyone got into crypto in a different way, but two consistent themes I've heard is something that had to do with payments or something that had to do with arbitrage. And for me, it was the second. So if you're seeing an arbitrage, try to understand it. Try to understand why it exists. Is it a credit counterparty risk, like Clement was saying, or is it there because it's a balance sheet intensive trade? You need to post margin on two places, and there's a fixed global balance sheet that can do this. Is it a rates trade where there's a lot of demand for this stablecoin and it hasn't flown, moved into the second stablecoin yet? And maybe you're one that can do that, but. Yeah, I think actually a lot of the crypto community actually gets in because of arbitrage, trading on some of these places. Just try to understand what it is. Keep digging, keep asking, maybe find something big.
Okay, great.
And one more thing.
Yeah,
don't believe in these 10,000, 100,000 Bitcoin deals. Definitely don't come find us for these deals.
Find Sang. Sang's into that.
So we do have time for one more question we have from the audience. So I don't know if anyone specifically wants to address this, but who are the specific competitors to an open financial system from your perspective? Are they kind of traditional banks, or are they kind of up-and-comer upstarts in the technology field that are challenging the existing kind of traditional changes?
I mean, we just see innovation. We don't. I don't see one as like a challenger to open finance. Or I just see we see a lot of things happen. People trying, experimenting, and for us, we're looking at it from a trading arbitrage perspective usually. So,
I think any sort of tech that acts as a multiplier to what you can do with money you already have, or as you said, credit essentially, is good. Regardless of what format it comes in, what code it's written on. If there's access to it and it doesn't require you to do 20 different steps to get there, it's sort of inside of your it's in your purview, your day-to-day, and other people are using it, there's a network effect, then it's useful.
Okay.
Right. Easily accessible, network effect, and sticky. Yeah.
Okay, great. If you give a round of applause to our panelists, please. Thank you very much.
Right.
Thanks, guys.